Here. We are still thrilled that you are all here. And Cliff was so nice to invite Andreas to speak to us. So Cliff, please introduce Andreas.
Absolutely. So if you invest in single family rental properties, you're definitely in for a treat today. Andreis Bergeron is on a mission to make investing in real estate simple and accessible for everyone. Today, you're going to learn how pairing world-class data analytics with a team of expert advisors will help every individual investor identify, evaluate, and close on single-family rental properties that meet your specific investment goals across the country. If they aren't in your state, I believe they soon will be, and you're going to want this team in your back pocket when they are. So with that, I'm going to turn that over to Andreas.
Awesome. Thanks, Cliff. Well, I'll just share my screen here. Can you guys see my screen there?
Yes.
Awesome. Yeah, as Cliff said, my name's Andreas. One of the founding members of Awning. We've been around. We raised our capital about 2 years ago now, right outside of San Francisco. I grew up in Sausalito. We raised just shy of $10 million, and we're growing really quickly. So we are based in California, Texas, Florida, Alabama, and Georgia. And we're expanding to a handful of other states as we speak right now. So from the highest level, what Awning is we are a tech-enabled brokerage. So we have brought in, institutional data and sophistication to the single-family space in order to help individuals be able to source, analyze, and transact single-family real estate. So as a whole, I want to keep this really conversational. I've got a short presentation to go with through you guys, and then I'll kind of give you a quick sneak peek of the platform, and then you guys can ask any questions you guys might have. So, from the highest level, this is kind of the presentation we use with our individual investors when we introduce them to Awning. I'm not going to go through each one of these steps, but from a high level, what we do is, we have individual investors that come in, whether that's, through bigger pockets and it's their first investment, or they own 10 properties and they're looking to grow their portfolio. The first step is to understand their goals and their background. And then, for people that are newer to the space, to help them understand, why real estate is so powerful, and specifically why single family real estate has advantages that other asset classes don't, and then how Awning can support them specifically. After that, we basically end up going into a workshop around their investment strategy so that we can nail down what specific types of properties will meet their investment needs so that we can find the right properties and analyze those on their behalf. So I'm going to just skip through a couple of these slides because I want to keep it brief. But when we talk about Awning as a whole, as I mentioned, we raised $9.3 million from Global Founders Capital as well as Mass Mutual Ventures. We're a team of about 15 right now and growing really quickly. So, why Awning? What makes us unique? So first off, there's kind of this turnkey aspect. So, we are a brokerage, but we have lots of established partnerships, whether that's with property management companies, insurance, finance, so that you can come to us as that one-stop shop and understand, what it looks like to invest out of state. So I'd say 95% plus of our investors are all out of state investors. Most of them high net worth individuals looking in areas that are new to them. And so, when you are looking out of state into new markets, it's important to have a market expert and to be able to utilize that data. So basically what Awning does is we ingest tens of thousands of listings across multiple different states. And what our softwares and algorithms allow us to do is basically to be able to analyze any given property and what the cap rate will be, the cash on cash return, estimating how this will perform as an investment vehicle. Then what we can do is, instead of looking at, every single property, we can kind of filter it and whittle it down to, a consumable amount, whether that, a couple hundred properties. We then have a team of analysts that review each one of those properties, make sure that pencil is really sharp. And then and only then do we push those and match those customized properties to specific investor needs. So we're essentially bringing that institutional sophistication and analysis down to the individual investor, because a lot of this data not only is consuming all of that property information sophisticated, but we overlay that with demographic information, economic trends. Who are the tenants that are living there? How much money are they making? What is a realistic amount we can expect for rent in this area? Is it growing? Is it contracting? And then lastly, having experts that focus on investments. So all of our agents, or what we call client advisors, specifically focus on investment properties. And they're here to help you kind of each step along the way. So basically how awning works, like I said, that first step is kind of understanding your goals and strategy. The next step is being able to actually review properties. So you can kind of get access into the platform. You can review those properties, see which of those kind of, attract your appetite if you're looking for certain property types. You can then make an offer through the actual platform, and I'll actually open it up here so you can see how that all works. You go through that due diligence process, so we'll help through, getting the inspectors out there and whatnot, running the numbers, making sure, negotiating if there's anything that needs to be changed, and then also connecting with the property manager. And this is a big point because I think a lot of brokers out there, after the transaction's over, you're kind of left to your own devices. And so this is where we really partner closely with the property management companies to ensure that the analysis that we've performed on these properties is realistic. And so when you actually go to close on this property, it will actually perform at the numbers we have underwritten. And so then it's kind of, transitioning to autopilot. So passing off those keys to the property manager. They'll help you market it, screen it, qualify the tenants, and then ultimately lease it. And then they'll handle the ongoing management. And then, the last step, the most exciting part is, collecting that first rent check, and being able to kind of view the progress of your real estate through dashboards that the property management company will provide. And the best part of all is that we do this with no upfront fees or no reoccurring fees. So we're compensated the same way any other brokerage is, which is through the buy side commission paid for by the seller. So I'm gonna pause there for a second. Wanted to see if you guys have any questions, and I thought I could just jump directly into the platform and kind of show you how it works. Any questions about that, or I guess single family real estate in general?
So what you're doing is, it looks like that you created a program that is taking a lot of the analytic work out of having to identify these properties. You're making it very easy for people to step into a profitable opportunity, understand the market that they're getting ready to step into, and understand if that's a growth market or declining market. Is that a fair understanding?
Yeah, absolutely. And we actually used to have a different user interface setup where we divided it into growth opportunities and linear opportunities. And we just moved away from that, so people, and into filters, so people can pick basically any market they'd like, any price point, year built, any sort of property attribute that you can think of. You can basically come into these filters here, select them, and then it'll filter down to the specific properties. But yeah, from the highest level, typically people are looking either for, cash flow markets or cash flow opportunities, or more appreciation opportunities. And depending on that strategy, we can support, anybody under kind of the strategy under that sun.
And then your company is also providing or pairing on the management?
Yeah, so we have partnerships with property management companies. And so basically, and I think the big difference there is, I think a lot of people, anybody can partner with a property management company. The piece that makes it different is, how is it actually going to perform, right? So all these numbers are, hypothetical until they actually start performing, right? It's, how accurate is this? So what we do is we actually confirm all of our underwriting assumptions with the property management company while we're in escrow, so that you can feel confident that when the escrow does close and you own the home, that it'll actually perform at the capabilities that we analyzed.
Nice. And I'm curious, with your analytics, are you factoring any type of cushion should there be a change in the status of the economy?
So right now, like the biggest focus for us when we think about like how our software works is being able to come up with the estimated rent, because that's going to get us to, an accurate cap rate. So typically our software can get within about 5% of an accurate estimated rent. And then, as I mentioned, that will be able to help us focus on the ones that are, truly unique opportunities. If something, let's say everything around a given property is a 4 cap, and we find one property that's a 4.8 cap, then we're not even going to analyze all the other ones that are 4 caps. We're just going to focus on that 4.8. And then, yeah, it might waver up and down a little bit from 4.7 or up to 5 cap. But that allows us to kind of focus our time and effort and, utilize humans where it's necessary, and utilize technology where we can scale and, really, drive down the amount of human effort needed, but increasing the opportunity for each consumer. So
Nice.
I'll kind of run through one of these properties here, if that'd be helpful. I'll just grab one here, and let's see, Florida. Let's grab Texas. Sounds like there's a lot of Texas people here, so. Okay, let's grab this one here in Grand Prairie. Yeah, so first when you come off, it's going to look, similar to some other platforms. We get kind of high level information on the property. You can quickly, scroll through the photos, see what this property looks like. Looks, pretty standard. Looks like granite countertop finishes. This is a 4-bed, 3-bath on the smaller end of the square footage side. We've got a 4.7 cap, and then you can come in and customize any of these assumptions. So this is what has already been, entered in here, but you can change any of these based off your specific situation. So this is the monthly amount that we estimated based off of our software and our human team. Again, once we get into escrow, we'll then confirm that with the property management company. And if there is a significant change, then typically, like I said, the only reason why we're backing out of contracts is when there's, significant amount of work that comes up on the inspection, and, negotiations are more difficult, depending on each seller. You can update any of the interest rates. So let's say you're in the 4.25 cap, whoops, that's not. It'll update your cash flow numbers. We pull in the property tax, insurance information, estimated repairs and maintenance, property management fee. So if you're not managing this yourself, or if you are managing it yourself, and let's say you live in DFW, you can move that down to 0. If you have a property manager, you're going to work with, and how much they're charging, you can, drop in the correct amount. And then you're going to have our appreciation, rent growth, and expense growth models. And then, the renovation costs, typically those are much more human driven amount. So there's not as much technology and software going into estimating that. That's a difficult one to do. I think that'll be a nut for another company to crack. But basically how that works right now is, if you're interested in the property, you can, click this button, request a deep dive. You can submit an offer. You'll get some more specific information about the particular property and why we think it's a good opportunity for the particular customer we matched it with. And then you can ask us any questions and kind of, send a quick question about a property if you want to kind of pursue that, or you just want to learn more about the asset in general.
And what does the deep dive entail? What are they doing? Is that where they're writing a report?
This is kind of where this is kind of where we describe what a deep dive is. But basically what it is just, pinging us, letting us know that, you're interested in this particular property. Most of the time it, consists of, reaching out to the listing agent, getting a little bit more information about the property, pulling some comps for you guys, just getting a better understanding of, if you were going to submit an offer, what would we suggest that amount to be? If there's any particular information we can gather from the listing agent to make, your offer more favorable, or just any information we can gather from them so that you can feel confident with the asset as a whole. And then, there's kind of a plethora of different information you'll get here. You can kind of sift and sort through your returns over time, look at cash flow graphs, property value and amortization, get an idea of the neighborhood. I think this information is really helpful and interesting. So this comes from niche.com. So it basically breaks down ratings for every given zip code nationwide. And they actually have their own proprietary information as well from renters and owners that actually write reviews of, oh, I really like this neighborhood. It's very family friendly. And they give it a star rating. So not only do they take into account demographic trends and economic trends, and, you've gotten here jobs and walkability, crime safety, they pull all of this information to give an overall grade for that neighborhood. And the goal of this is to kind of help with what you were talking about, Cliff. So, generally, is this a higher risk area? Is it a lower risk area? Obviously, with a higher cap rate, the higher the cap, the higher the risk. The lower the cap, the lower the risk. So, typically that's the trend. And so in order, this really helps for you so you can understand the breakdown of what type of risk you're accruing, or, what type of quality neighborhood it's in.
So as you're describing the cap rate, I normally don't hear too many people in single family evaluating properties utilizing a cap rate. Why does your company utilize a cap rate in evaluation?
Versus cash on cash, or just
Versus
versus
cash on cash? Yeah.
Yeah. So we have, I mean, we also have cash on cash right here. But cap rate is just, cash on cash takes into account your debt, and everybody's debt is different. And we don't know how much they're going to be putting down. So if somebody's putting down 20% down versus 30% down, your cash on cash is going to be completely different. If somebody has a 4% interest rate versus a 3% interest rate, the numbers are going to be different. So typically we use cap rate. And I think, similarly in the commercial space, it's just a quick and easy way to compare assets. Obviously not the most in-depth metric you can use to analyze or understand the performance of the property. But I think it's probably the quickest and dirtiest way to compare assets side to side. Once you have, your information, or you're pre-approved, how much you're going to get, how much your interest rate is going to be, you can actually update that information, and then it will automatically input that into every property that you have in the awning system, so that you don't have to recalculate that every time.
Actually, this is really great, because people keep saying, well, if you could just get 1% of the purchase price back, but this really puts it in where someone could actually analyze it and see that they could actually make more than the 1% and really have a little bit of cash flow rather than their 1% theory. No one's ever really looked at cap rates on single family. So this is really interesting that you're doing this, and it makes it much easier for someone that wants to invest in single families. We think that personally, we think cap rates suck here, because our cap rates are very strong in the commercial world.
Yeah.
But there are people that just want to do single family. And if they really want to be in single family, this is a great program, I think.
Yeah. And I think that, I think the biggest difference generally that we've seen within single family is just the opportunity for liquidity as well as additional appreciation. So because it's, not only now a performing asset, or can be used as an investment vehicle, but it's also a retail investment, that typically is, driving up the price and the appreciation a lot higher, and allows people to not only be able to, buy and trade these assets with more frequency, but also because it's being driven up by individual consumers that are looking to occupy the residency. Typically, we're seeing higher appreciation metrics than you see in the commercial space. So while the cap rates, obviously aren't as high as they are in, multifamily, you typically probably could see, they're all getting compressed, but probably, 5, 6 cap, depending on the area. In single family, maybe it's a 3 or a 4 cap, but your appreciation potential obviously is where you have the largest gains.
Yeah. And the other thing that would be for somebody that really it doesn't matter where they're investing, because they want to invest where they could get the most returns. They can actually compare state to state, county to county, city to city, and pick and choose what they want.
Yeah,
so
absolutely.
Do you guys invest? Is that why you started this platform?
Yeah. So my other co-founders, they have he's got 30 or 40 properties in the DFW and Houston area. And then also, a lot of my background actually came from, originally it was from residential real estate and mortgage loan origination, and then spent a quick stint doing business intelligence for multifamily. And so the idea of awning kind of spurted off from there, and realizing kind of the inefficiencies as well as just access to individuals to real estate investments as a whole. So I think it's a big area for opportunity, not only for a business, but for individuals to grow their wealth.
It's a very interesting platform. I don't think you have any. So are you working? So I'm sorry, I had a little business I had to take care of, but you said you had partners. Are your partners part of the business, or are your partners like other people that have turnkey properties that are ready to go? So we're a tech company. Again, we raised about $10 million of venture capital from 2 different VCs. And so we're a team of about 15 now. The way that Awning makes money is through the buy side brokerage fee. There's people a part of Awning that own their own investment properties, but that's kind of outside of Awning, or they purchase them before
I mean, some people purchase using awning now too, but I don't know if did I answer that question there?
I don't know if you did. So I know a company that puts everything together and then they sell it
Yeah.
to an investor. They'll go out, they'll actually buy the house, rehab it,
Mhm.
put a tenant in, and
Uh,
then,
Okay, I got your question now. Yeah, so awning never actually owns the properties. So we just broker the properties. So
Okay.
we just help in support and advisement throughout the full process, but we never own the actual assets. Mark, I see you have a question there.
Yes, sir. Yeah, this looks interesting. And I'm sorry if you covered this. I stepped away for just a second, but I see my renovation costs there. I don't see, expenses, utilities and insurance and, management fees. Is that coming
Yeah.
out of that $89 a month, or is that something, how am I calculating that on these properties?
Yeah, so, well, I guess two questions there. So first off, the expenses, when you just click on the customize button here, you'll be able to see the monthly expenses. So you can come down to here, you can see there's $1,074 of total monthly expenses for this asset. It'll have the breakdown of each one of those line items. For renovations, again, this is a much more human-driven function and really gets, dug into when, you kind of raise your hand and you like the property or say you're interested or want more information. We haven't built a machine learning algorithm around estimating renovation costs. I think that's a difficult one to do. So that's pretty human driven right now. But a lot of the properties that we focus on, because almost all of our customers are out of state, like you were saying as well, Peggy, a lot of these people, live in San Francisco or live in Chicago or New York or, high income states, but they can't afford or don't like the returns they get in those areas. So they're looking in other metros and other states to get better returns. So yeah, I think a lot of these are turnkey assets and have minimal renovations opposed to like the fix and flippers that a lot of people go after to like build equity.
yeah, and you don't carry those, right? You don't have the fix and
No.
flipper, no, they're yours.
We don't focus on those.
Okay. Have you considered that as a separate part of your platform?
We have, and at one point we did have those opportunities on here. The reality is that it attracted a lot of wholesalers and not end buyers. And so that didn't make as much sense, as well as it's just a much more like, there's things in real estate that are human driven and should be done by a human. And then there's things that shouldn't. And like fix and flips takes a lot of like local market knowledge and like, construction knowledge, and like each renovation is going to be different around expectations. So there's just so many components there that introducing technology to that space didn't make as much sense today as it did for more of a turnkey asset, if that makes sense.
Does. Nika?
So are there any charges to the person using your platform?
No, there's no charges. The only way that we make money is through the buy side commission when you transact, or if you transact. So
Nice.
The same way as any other broker.
That's cool. And do you think it would be good for people looking maybe for like other types of holds, like short-term rentals or specialty housing? Like I was thinking like pad split or something, if like finding something, but then being able to because you can property manage, you can do whatever you want. The property management isn't necessarily tied in. You're just offering that as additional resources for people to use, right?
Yeah, exactly. And then to answer your question around short-term rentals or STRs, we're actually working on that right now, integrating short-term rental data, and soon you'll be able to basically like toggle on and off the performance as a long-term rental versus a short-term rental. And obviously there's other markets that are better for that. So we're going to start expanding into markets where short-term rentals are, more advantageous. And we've been doing quite a bit of research into that too. And it's really exciting because I think when you think about cap rates or just returns of single family real estate, that's where, shift the strategy. You think of like buy and hold, fix and flip, STR is kind of that newer strategy that's entering the space. And you can be looking at, I would say anywhere from 6-8% to like 12-14% cap rates with short-term rentals. And that's with management in place that take around 20 to 25%. So it really starts to get pretty interesting with short-term rentals and certain vacation markets.
Yeah.
Andreas, would you please explain what an STR is? We have a lot of newbies on and they might not know what that is.
Yeah, an STR is a short-term rental, so just like something you'd see on Airbnb or VRBO, and renting it out in a nightly or shorter than monthly basis.
Okay.
I had a second one, but I'm gonna have to
Yeah.
think about it. It escaped me. I'll be back.
Okay.
I got one real quick.
To that.
Oh, go ahead, Mark.
Sorry, Cliff. I didn't mean to over talk you there. I'll just ask quickly on the STRs. Is that something you're vetting to make sure those are compliant with local laws? I know that's a whole bunch of spaghetti in there.
Yeah. Yeah, it is. So we actually, like, just a few weeks ago, we wanted to see like the appetite for short-term rentals with our customers. So there was a pretty big appetite. And I think the quick learning for us was, we started to underwrite and put a handful of properties on there with the partners we have to get that basically scrape Airbnb data for us. But what we figured out pretty quickly is that it's a new space to a lot of people, and there's lots of questions, and they need support, pretty much every step along the way. So if that's, laws and regulations, they need us to know that. We need to be the expert there. If it's, a specific small vacation market, we need to be the expert there. If it's furnishing the asset, having partners for them to do that. So that's kind of what's coming with Awning over the next couple of months, is being able to provide that full turnkey solution for short-term rental. So that's kind of in the works as we speak.
So question for you, Andreas. With as much migration has taken place in our country in the last couple of years, does your data actually account for the movement of incomes from one area to another area where people work remotely, where that now can become a new standard for rents and where rents can go? For example, people that are migrating out of California into Nevada and Texas, or people from New York, New Jersey, and Connecticut migrating to Florida?
Yeah, so I'd say, like, right now, I wouldn't, like, the information on a property level or just like in the platform, I wouldn't say like particularly gets at that. I think that what we do is we put market presentations for every market that we're in, and we do like, a deep dive into, what are the economic trends, the demographic trends, like who are the new employers, so that the consumer can feel really comfortable about that particular market or sub-market. So I'd say a lot of those things are more like the data tells one piece of the story, but really the better way to tell the story is kind of a mix of the data and the understanding of that market. So we just put custom presentations together for each market that we're in. And then we walk through that high level overview of, why is DFW a great market? What are the things that are changing? Who are the major employers? How are the demographics changing, for example, in a sub-market? Is it being gentrified? Is it not? Is the median household income climbing at a certain rate? And what is the national average? So I think that's kind of the way we approach that solution or problem, is being able to provide a custom presentation for each market that we support.
Now, are you also looking for new jobs that are emerging in an area? Like new businesses that open, new factories?
Yeah, exactly.
Right.
Yeah. So like,
so you can really evaluate and identify emerging markets before many might even know it across the country.
Yeah, just, looking after big employers, like in Spring, Texas, like the HP campus there, I know is growing. And then, Tesla's got their Gigafactory that they're setting up in Austin. And I think that, the data, I think the data can tell it from one point, but it's almost easier to like, it's more qualitative. So it's almost easier just to do the research and then share that research, because those things aren't changing that frequently. Where, like, I guess you could say, like, medium household income, for example, that's a good use case of where data should be used, where it's like, who's the new employer? It's like, well, that only, when is there going to be another HP factory, a newer giga center for Tesla? It's like, okay, not that often. We can just kind of keep up to date with local news and inform our customers.
Yeah, but in Columbus, Cisco's moving in, they're creating 3,000 jobs. That's a huge amount of jobs for one company.
Yeah, that's awesome. Yeah, so each market we go into, we basically do that research so that we can be equipped to support
That's
our
great.
customers in understanding that market.
So Nika, did you think of your other question? No, okay, Cliff, you still have another question?
Yeah, so do you stay focused primarily in primary markets, or do you also venture into secondary and tertiary markets?
I'd say mainly secondary, I guess, and I see this in two different ways too. So
Okay.
like, I would say that like, there's the primary MSAs, so just like the biggest MSAs, so like, you know, San Francisco, Chicago, New York, you know, DFW, and then there's like the submarkets inside of those. So I guess is your question more around just like the biggest MSAs, or like spreading outside of the
Not
city?
necessarily just the biggest MSA. So like Charlotte, North Carolina, you know, that
Yeah.
might be a primary market. And then when you're
Yeah.
looking outside of that, you might look at Greenville, South Carolina as a secondary
Yeah.
market.
Yeah, so I'd say like, as far as like the Metroplex goes, like, you know, we're licensed in each one of those states that I mentioned, and we have access to all of that data and information. A lot of the time where we're purchasing is in the suburbs outside of the cores of those major metros. And that's where all the institutions are purchasing too. Because like, we don't really look in tertiary markets because a lot of our customers really want like stability, and they don't want to take on a lot of risk. And so most of the time that's looking, I'd say 20 to 40 minutes outside of the major metroplex of whatever city we're in. And then a big thing that people go after, this is actually a big learning from speaking with some of the institutions, is school grades. So a lot of individual investors as well as institutions use that as a proxy for future appreciation. So they're typically looking for, you know, B and B plus and up to signal that this is a growing area with future appreciation, opposed to an area that maybe is in a decline or is not improving. And, you know, typically, again, that aligns with areas that are, you know, 20 to 40 minutes away from the city center, where people are commuting to get to work. And they're also in quality areas for their kids. If it's with a family, typically longer tenants, typically keep better care of the home as well.
Wow, this is great.
It is pretty amazing. And I don't want to monopolize the whole time with Andreas. I'd love for anyone that has single family homes, or if you've been looking at investing in and expanding your portfolio in single family homes, please raise your hand, reach out, and let's get some questions to Andreas.
Yeah,
Hello, Andreas. Great presentation. So far, I mean, it's pretty interesting what you have here. I had a question in regards to, so to my knowledge, so far, these are listings, right? Like active listings that you have here on your platform.
Correct. Yeah, these are active listings.
Okay.
It's a both mix of on market from the MLS as well as off market that we've sourced from other partners and players.
Okay, great. I was gonna ask, so considering how, like, you know, how the market has been, you know, multiple offers, like what has the conversion rate been for your buyers? Like, you know, to get their to get their offer accepted, like how has that been looking, you know, over the last 2 years? How has that been looking?
Yeah, that's a tough one because it's been a hot market. But I think, you know, the biggest question that comes into mind is like, you know, we'll kind of, you know, we have a strong understanding of what it will take to win a deal, whether the customer is on the same page and they want to pay that amount for it. I think that's where there's this big delta. And that's also what's just happening generally in real estate right now, where it's somebody's comfortable paying, you know, $500,000 for this, but then, you know, you talk to listing agent, they're like, oh, it's going to go for 580. You know, that's what it takes to win a deal these days. You're competing against 10 other people. You're competing against investors, all cash offers. Like, you have to come to the table, you know, with a strong opportunity. And the way that we kind of support our clients in that is, you know, making sure that the numbers still add up. So if it's, let's say it's a 4 cap and we say you need to go 5 or 10% over to win this deal. If you go 5 or 10% over, it's going to move it down to a 3.5 cap. Now, looking at our data, is that a unique deal still with, you know, a 3.5 cap, considering the properties around it? You know, maybe not, maybe it is, maybe it isn't. We'll kind of, you know, let you know where that ceiling is of, okay, you shouldn't go above that. Because if you do, then we can just find you another property that's, you know, similar or homogeneous to the same property type and be able to lock up another opportunity. But in general, super hot market. Like, you know, we're going after, like, I mean, tens of offers or more. I think that there was a point there where we thought it was slowing down, and then this year it's been just as robust, I feel like, as last year or more.
Yes,
so
exactly. Okay,
it's
yeah.
crazy.
Okay, good. Well, that makes sense. Thank you for answering my question. Appreciate that.
Anybody else? I know, so we don't have our Latina here who does a lot of, well, she builds and then she also flips. So she's probably not your ideal customer. Lisa, Prince, do you have any questions?
No.
What about, okay. Nothing?
No.
Julie, you've been in the business a long time.
That's true. Just talking to my agent in Kansas City about selling something. So I'm curious, this platform is something that, according to what I'm seeing, and I came in a little bit late, so forgive me for not catching the beginning of it. You cover lots of areas in the country. Are you capable of doing that and getting the data?
Yeah, so we're in California, Texas, Florida, Alabama, and Georgia today.
Ooh.
Okay.
Which
Statewide
been-
in each of those?
Yeah, yes, pretty much statewide. You can see the markets here. We're just focusing kind of in the major metroplexes. So Birmingham, there's your markets for
Huntsville,
California. I mean, there's areas outside of this that we can service too, but these are kind of just the areas that people are excited about. Yeah, so I was just kind of scrolling through some of those.
So how long does it take you to get into another state? Do you have to go through the state itself to be able to put your platform out there, or is it demand?
Yeah.
What is it that has you
Yeah.
expand? Yeah, what?
So for us, like the timing piece is the most difficult piece is just like filing the paperwork with the state and getting the brokerage set up. Like it is just a very lengthy process, and especially in COVID, like these are like governmental agencies and MLSs, and it just takes forever. So it takes a couple of months. So we just have to come up with, we have like a game plan of expansion markets that we're going into. So the next ones we're going into are Colorado, Washington, North Carolina, Tennessee, and Arizona.
Should put Ohio on that list.
Ohio, yeah. Ohio's difficult. So each state is a little bit different with brokerage rules, but they have like single entity states and multiple entity states where you only can have one broker of record represent one business, where in a lot of other states, they can help multiple businesses. But Ohio's also on that list too. Just a matter of time.
What? No competition is allowed in Ohio?
No, not no competition. It's just you need to, like for every state that we go into, we need a broker to have their license in that state. So we need to find somebody that is what you call an employing broker. And in Ohio, you only can do that for one business. So you only can do that for like John Doe brokerage. You can't also do John Doe and awning, where in a lot of other states, you can represent multiple entities or multiple brokerages. So it makes it a lot easier to either find that talent or secure that licensure. Just a little technical thing with a couple of states that make it harder to expand nationwide.
Yeah, it's like having the representative for LLC in each state where you have an LLC.
Exactly. That's you. Yeah, exactly.
Yeah. Oh, that's very interesting. Oh, I learned something new today. Have fun.
Seema has a question.
Yeah, hi.
Go for it.
My question is, so do you do all the work? You find a rental, or you find a house and sell it, or you find it, buy it, and you can manage it, and you just want my money?
Yeah, so we, again, we don't ever purchase the properties. We are just
Yeah,
a brokerage, so we just represent you, but we help with every step along through that process. So like, again, the properties come in, we filter it down to the ones that are truly unique investment opportunities. We have a team of analysts that review those. Then they get pushed into the portal here. If you're interested in a particular property, we have agents in multiple different states that you can engage, ask questions about, get more information on the property, ultimately put in an offer, hopefully get that accepted. Then we connect you with, if that's financing partners, insurance partners, property management, so that it all can be, as hands-off as possible.
Right. Okay, that sounds better for me. Okay. Thanks.
So if somebody here wanted you to sell a property for them, you could take the listing as long as it was in the state that you're already have a license in, correct?
Yeah, so right now we really focus on like the buy side and supporting buyers. But because again, we really just focus on the investment side. So
Mm.
if somebody has a performing asset that already has tenants in place, then I think that could be, interesting. They could definitely bring us a listing. But if it's, a more standard, retail property, I think they would be better off being served by somebody with boots on the ground in, that particular area that knows that area.
Okay. Just looking to see what doors we could open for you.
Yeah, no, I appreciate that.
Yep. Anybody else with any questions? Because we still have some time left.
I have a question. Do you help with all the resources, meaning like the property manager, possibly a contractor if they didn't really want a property manager, and lender?
Yeah.
What all the resources do you help with?
Yeah, I'd say we help with pretty much all the resources except for like renovations. Again, our bread and butter is not like finding fixer uppers and getting those renovated. We can suggest a couple of people, but really like our partnerships that we have are really strong. So like one of our partnerships we have is with Specialized in Texas, and they offer 6 months free for their for their property management services, and that's kind of
Nice.
part of what we're offering up, part of what they're offering up. Some of our lenders offer like free appraisals and certain kind of offerings that make it more advantageous, as well as they're very ingrained in our process. But any other areas or like partners that you want help with, like we can obviously offer up some contractors to work with or some renovation teams to work with, but the rest of our partners that we work with, like our lenders, very ingrained in our process. Our property management companies, they before we close on any property, they agree to the price that we have analyzed it at. Insurance, we're checking in the closing process. We'll reach out to our insurance providers on your behalf and get that handled. If you want to nail down your own insurance providers because you have other relationships, you're welcome to do that too. Our goal is really to make it like the way I would put it is like there's turnkey providers out there, and that the typical process, they buy it, they fix it up, and then they sell it to you. They're getting all the profit and all the advantage in that. So we're trying to take out like those pieces so that you can take advantage of the equity, opposed to us taking all of that. So I think that by providing just the partnerships, opposed to like us white
Doing it for
labeling them
you.
or us doing it ourselves, then like we would just be tacking on fees everywhere. Where right now the only fee you pay is the buy side brokerage fee, which is essentially free to you. So we're trying to keep it very like low lift and easy for anybody from the newer investor that wants that handholding, that turnkey process where we can provide that, or somebody that's more sophisticated and already has a team that they don't have to like pick apart our offering, and they can just kind of choose a la carte what they need.
Yeah. No, I think it's ingenious.
This is nice.
I'm curious.
Yeah,
what would
what
stop
about
an individual from coming in and just using this to shop for a house of their own?
Yeah. So yeah, right now there isn't really, to be honest. So like as a technology company, our main goals are growth. So just getting more eyeballs on the platform, getting more people transacting. Ultimately we will start to gate the platform. If we see users coming in here and using it at a time, then using the calculator and then never transacting. But that's kind of a problem we'll cross when it comes up. If we find people are abusing the platform and not using the service, we'll eventually create ways to gate it depending on people's use cases and having them sign up and use the service.
This has been an absolutely great presentation, Andreas. Thank you very, very, very much for this. It's really exciting that you have this platform, and we wish you the best on its performance.
Thank you. Really appreciate you guys, being a great audience today and asking questions. That's what makes it a good time.
Really appreciate it.